Hello, this is Chuck McClure with eXp Realty here in Charleston, South Carolina, and want to come to everyone today to talk a little bit more about some of the issues that we face as agents and more importantly, what our clients face in terms of trying to work within the constraints of the marketplace right now with interest rates and what have you. So again, we want to introduce Jim Duffy with Alcova Mortgage.
Good to
And
be with you, Chuck.
thank you, Jim. And Jim was very gracious to agree to help us address some of these issues. The last time he and I spoke in a presentation like this, we discussed the issue of waiting to move, what the cost of that was. A lot of people, because of the current interest rate situation, are kind of on the fence of whether to wait 6 months or a year and or move now in the process. And we talked about that and some solutions. But that leads to kind of the next issue. People make the decision, okay, I'm ready to start looking at my next home or my first home. And especially if they're in a situation where they already have an existing home, an existing mortgage, how can they make that transition? Because the timing obviously is one of the big sticking points. And one of the big solutions that Jim has with Alcova Mortgage, and he's going to talk a little bit about, is what's referred to as a bridge loan. Clients have heard that, but I think getting an explanation and some of the nuances of how that can work depending on a client's situation, a buyer situation, Jim can explain that. So turn it over to Jim and we'll go from there.
No, thanks, Chuck. I appreciate that. You're absolutely right. It's a great time to buy right now because rates haven't fallen. I know that's counterintuitive, but you've seen it. You can often negotiate that the seller pay closing costs or a temporary buy down or something. And when rates fall and people flood back into the market, that's not going to happen. But the other thing that I don't think will happen, and it's even right now, we're getting a lot of pushback from offers that are contingent upon the sale of their existing home, right?
Right.
And just sellers don't want to, if they're ready to sell, they want to make sure it's going to close and close in a timely manner. So the less things they have to rely on, the better for
Right.
the seller and the better for the buyer sometimes too. So the bridge loan kind of solves a few problems, right? First of all, it meets what the seller is looking for. Oftentimes, we call it the trade-in mortgage because you trade in one home for another,
Right.
but it's simply a bridge loan. But it solves the one problem of the seller gets what they want. They want to make sure it's going to close. It also solves the problem of the buyer sometimes is like so nervous about closing on the sale of their home and then closing on the new home and the home move. And they're nervous about it because they have repairs to do on their current home to make it, you know, market ready to get the top dollar, right? They don't want to do
Correct.
that. Well, on the one hand, they don't want to do it while they're in the home still. They'd rather just move and then
Right.
deal with selling their home. And on the other hand, sometimes they just don't have the money
Right.
and they have the equity, but not the money.
Right.
And so this allows the best of all worlds, right? You,
Right.
you take,
Yeah, I know. Again, my experiences, and you touched on it, is when someone's decided they want to sell their home to look for their next um, uh, home, whether it be locally or somewhere else, they only want to have to move one time. They don't want to have
yeah,
to pull all their things out of their house, put it in storage, wait till they find their next home, and then have to pull it out and move. In essence, move again.
right.
Um, so, it's always kind of chicken and egg. Hey, do I start trying to find a house and I see what I like? Do I want to put it on, go ahead and put it under contract and then try to, work on the sales
Right.
side? Or do I handle the sales side first? Let's get the house done. And once we go under contract, we'll start looking and hurry up and try to identify something and time up the closing dates and
Correct.
and all that stuff. And both of those scenarios make for a stressful situation and hard to manipulate because you've got, in essence,
Hmm.
three different parties involved. You got yourself and the person buying your existing home, and then
Yeah.
you got the other side. You've got the one you're going to buy. You've got to work with their seller, and they may have a similar situation. So
Yeah, I call it the
lot of
dominoes.
things going on there.
Yeah, all the dominoes have to fall in the right order when that works. And if one of them doesn't, then everything else gets jammed up. And that's what sellers are afraid of. And frankly, that's what buyers are afraid of too. One of the great things about the bridge loan is what it does is allow the buyer of the next home, right, to take this existing home out of their debt ratio. It's like it's already sold. And the
Right,
reason that we can do that is because they pull the equity, the bridge loan is just pulling equity out of their existing home and
right.
using it for the down payment. But we recommend, and I think it's on here somewhere, yeah, avoid double mortgage payments. We recommend they pull out enough to cover 2 or 3 mortgage payments on the existing home so they don't have to worry about that. That's already
Okay.
done. Their existing equity is covering the next 2 or 3 payments, and then they don't worry about it at all. It's not a
Yeah.
stress. So that's those are the nice things about the bridge loan. By the way, one of the things, there's several lenders who offer bridge loans, and the way we do it is we do the bridge loan. We lend against the equity of the existing home. So you can use it for down payment and other mortgage payments and all that. But we do it in conjunction with a company called Calc, Calque. What they do is they make an offer on the existing home and guarantee that they will close it in 4 months if it doesn't sell on the open market. Now, that's not the goal. The goal is it gives peace of mind. There's a buyer for it. But the goal is that you're going to list the home, Chuck. You're going to find a buyer for top dollar because it shows really well. And it's allowed the buyer to stage the home, I mean, the seller to stage the home perfectly, etc. But if 4 months goes by and there's no buyer for the home, there actually is because Calc has already offered to buy and they've guaranteed that they'll close on the home in month 4 if it doesn't sell in the open market. And the reason I mention that is because other lenders offer bridge loans similarly, but they offer it through a program that's A, more expensive, and B, only allows for certain realtors to work with the program. Realtors who have bought into their marketing cost, I guess you'd say. And this doesn't do any of that. So the homeowner can work with any realtor they want. So they can work with you and you're not getting a kickback, you're not paying a fee, it's just you're the best realtor for them, and then they choose you, and that's it. So I think that
Mhm.
gives freedom and flexibility to the homeowner as well.
Okay. Um, so logistically, I'm gonna look at it as if, okay, I'm looking to sell my house and I've got to sell my house in order to afford and to buy the next house. So as a seller, excuse me, as the seller side of it, I'm going to come to Jim at Alcova and I'm gonna, we're going you're going to run the numbers on the house, what's the existing debt, so forth
Hmm.
on that home. So you can determine the equity, and then
Yes.
from that, um, you will do what's necessary to create the bridge loan to one,
Hmm.
A, cover the down payment on their future home
Hmm.
at the time, and then like you said, also put in a little bit in there to cover mortgage payments um,
Yeah.
for 2 or 3 months. So while the whole process is taking place, um, uh, the sale and the next purchase, the whole process is taking place so that the seller side of it does not have to worry about, okay, coming up with a down payment out of pocket and coming up with additional monthly payments than they already were. And then at that point, now, and again, I understand what you're saying about the company. It's going to put an offer price to that seller's home so
Hmm.
that in the event, if it got down the road and there was issues with the sale or what have you, you've got the seller's got someone place as the buyer now. They're coming
Hmm.
into it as if their home was already sold, almost as if it was a cash transaction. There's not a contingency for, hey, I got to sell my house to close on the buyer side, because that's all been addressed through this program.
I don't know about you, Chuck, but I've been seeing probably 5 or 6 offers over the last month that the sellers just simply wouldn't accept it because it was contingent upon the sale of their existing home. And so we did this in a couple of those cases, and we just did the bridge loan and took that out and removed the contingency altogether, and the offer was accepted. And it's a negotiating tool. In a
Right,
couple of those cases, they got a better deal than they would have, they feel, and
right,
the realtor feels, than if they would have negotiated with a contingency on the sale of their existing home.
right. No, and I fully agree, because if I'm if um, if I'm now, I'm the seller, but now my role is I'm looking to buy a house and I'm putting an offer on a house, and the sale of a home always is a big contingency because things happen, and of course that
Hmm.
affects that seller and their ability to move forward. So taking that contingency out of the equation, you're right. Help is a big draw to get an offer accepted and to get a better price, better terms, or other things um, that make your deal more attractive um, than it would have been if you had to sell your house. So,
I
uh,
totally agree. So there's a fee for the bridge loan, but
okay,
there's not
yeah,
much of a fee to us. I think it's 125 bucks, but there's a fee for the calc to make the offer and offer
okay,
that service. But my thing is, if you can, if because you're using that, you can then negotiate a lower price in the home you're buying, and then have time to do the repairs, stage everything perfectly, so you get a higher price in the home you're selling. You might
right,
come out well ahead.
right, right. Well, and again too, I think the whole when you look at the big picture, it also accomplishes the fact that, or what we're trying to do is be able to make a decision now and be able to take action now to move on to our next property, whether it's either because we want to or maybe we have to, or job
Yeah.
relocation or family emergency or what have you. There are things that, hey, I've got to move, and how am I going to be able to make this happen? Or I need to do it before school starts in the fall.
Yeah.
So they get the kids situated. So we need to move now, but we're uncertain how to make it happen. So again, if you didn't, for those, if you haven't watched the last conversation we had again about the cost of waiting, let me know. I'll send you that video directly, or you can go onto my YouTube channel and look at it there. But it all kind of fits together
Yeah.
uh, in the
Yeah,
process.
it's just trying to serve the seller and
Yeah,
buyer at the highest level.
yeah,
That's what your job is, my job is,
yeah.
and I
And I
think
would
this is a
encourage,
tool.
yeah, and I would encourage, sellers and buyers, for that matter, to talk with Jim, directly too, about this process and about this program that his company offers, so you get a understanding. And Jim, I think you obviously would do this. You would take their situation and run their particular situation and run the numbers and
Yeah.
give a client specific, you know, this is what's going to take to make this happen. This is how the program works. This is what, if there's, what additional fees, minimal fees there are to it, so that everybody knows on the front end how this
Yeah.
process works and the effect it'll have on the entire transaction. So,
I totally agree. Yeah, and I'm happy to do that for anyone because that's just explore. That's just prudent. If someone's looking to sell then buy, or in this case, buy then
yeah,
sell, it's just prudent to dig into it
right,
and pull back the curtain and know exactly what the costs are, the timelines are, etc. And yeah, happy to do it.
yeah. And again, I think you just say it it really works on either situation. Unless, you know, someone's not through the closing table on their sell side, it's really an opportunity, um, wherever you're at in the transaction. I mean, as long as you've still got a house to sell, I think this is an option worth looking at. So,
Yeah, I would agree. Well, Chuck, thanks for serving your clients so well and bringing the information to them because there's a lot of
yeah,
realtors who don't know this exists, so they can't even begin to make the introduction or make the offer to
right.
help remove the stress from the whole situation, right?
Great. Yeah, I agree. I appreciate it. So anybody, if you're out there and you have some questions, feel free to call me 843-810-8134. My email is chuck.mcclure@icloud.com. But please take a look at the video and look forward to working with you and speak for Jim. I think, you know, he feels likewise. So we'd be glad to help you. So thanks for watching. All right.
Awesome.
Next time.
Thanks, Chuck.
Well, thanks, Jim. Bye now.